let's talk about the four indexes. You had a great article on marketgauge.com with IWM, SPY, QQQ, and DIA, and you compare them. I love that you used a 23-month. I think that's so smart, taking that bird's eye view and looking at it, like you said, moving away and not being so into the daily and watching so closely. And you noticed some interesting things, that only the DIA was close to being at near the 23-month. Is that correct? What did you see in that analysis?
So I've always used a 23-month and an 80-month moving average, but never in all the years that I have been trading seen it play out as importantly as it's been playing out this year. And if it's 23 months, people ask me why not 24 months. It's just a matter of the smoothing on the moving averages. But basically 2-year cycle makes more sense this year, right? Because 2021 was really super bullish, 2022 was super bearish, 2023 is kind of like the WTF, right? We don't know. So I've been watching these 23-month moving averages and indices very carefully, because in 2022, you had actually NASDAQ break down below it first, then the diamonds followed, then it was the Russells, and then it was the SPY. So they all eventually broke the 23-month, which showed you that we were going to go into a period from what we saw in 2021 into a much more contractionary period like we saw in 2022. So now this year, all they've all done is gone and rallied right up. I mean, if you don't love technical analysis after this year, you should, because I almost couldn't believe my eyes. That's why I did the 4-chart view in that particular daily. So Dow and the industrials and the manufacturing, which of course includes a lot of defense stocks, right? You know, so General Electric and Boeing, and then Intel's in there was a chip stock, got right up to the 23-month. The Qs are the next strongest, right up to the 23-month, which makes sense, right? Because of Apple and some of the growth stocks, right? But IWM is way down, and SPY is closer to the top, but not quite there. None of them have taken out that 23-month. So the reason why I think it's so fascinating is if we really are going to see the worst is behind us and we're going to go into an expansionary period, we got to at least see one of them clear. And my bet would be the diamonds would clear first, but they haven't. If NASDAQ clears, that would be good. And if we follow the 2022 pattern when they all broke down, one goes, the other one goes, and then the other one go, oh, okay, all right, I guess we're growing. If they don't get through it, that's information. It means all we did in a sort of euphoric state about the Fed and realizing that the Fed can't save us is rally to resistance. And if we start to move down from here, you'll see me start writing a lot more about the 80-month, which is a much bigger business cycle of more like 6 to 7 years, which so far all of them have been holding on to.